So ADA has been doing fairly well as of late in terms of price appreciation. I mean, from the lows of the previous 12 months, the price has increased by at least 600% at the current market value. And that got me thinking about what a fair market value for ADA could possibly be, and whether it's likely to be above the current market value. So how would an investor even go about figuring out an accurate way to value ADA? I mean, being so young, cryptocurrency as an asset class doesn't really have an established method of valuation, which has been proven to work well in the long term, and it's the long term we're thinking about here. Anyway, before we get any further, I'd just like to stop and say if you're an ADA investor yourself, or just interested in the project, consider subscribing for more content and news coverage like this. Okay, so in this situation, I'm thinking of a quote from Ben Graham, the father of value investing. In the short term, the market is a voting machine, but in the long term, it's a weighing machine. And what he means is that in the short term, the market price is merely a function of consensus opinion. What do people think about ADA today? And as we all know, consensus opinion changes quickly and swings between a pendulum of extreme optimism and extreme pessimism. So truth be told, there's no real way to accurately predict market value in the short term, as in order to be able to do that, we'd have to be able to predict consensus opinion, and with the exception of capitalizing on insider information, which is probably illegal anyway. The only other way to be able to predict consensus opinion is to be able to predict the outcomes and occurrences of major global events and events which have an influence on the crypto market. And not only this, but to do it all before they actually happen, which is of course completely unrealistic. This leaves only one option for an investor looking to try and make accurate valuations, which can then serve as an information basis for making informed decisions on whether to invest or whether there's better opportunities available elsewhere. You have to try and look at a project's fundamentals and then figure out what value they will bring to the world and in turn what value they will get back. When Ben Graham said that in the long term the market is a weighing machine, he meant that while in the short term consensus opinion was the major determining factor of market value, eventually in the long term an over or undervalued asset will be priced at its fair value. As mentioned before, markets swing between states of extreme pessimism and extreme optimism, which by the way, if you understand properly, will give you a massive advantage on the competition when it comes to getting in low and selling out high if that's your strategy. But we'll talk about this subject properly in another video, as it's so important that it deserves its own dedicated conversation. Now if you take a look at this chart, you'll see that right around here the price was between 2 and 3 cents per unit, and the market was probably near the peak of its pessimistic side. But then all of a sudden the market takes a full reversal and the price shoots up to $1.23 and is probably near the peak of its optimistic side now. In both scenarios the price had become severely detached from fair market value, in one situation likely heavily undervalued and in the other situation likely heavily overvalued. Now to me this is a strong indication that the fair value lies somewhere in between. Not a guarantee, but at least a strong reason for further consideration and analysis. Anybody familiar with the way in which asset markets work will know that bull markets are usually far shorter and more condensed than bear markets. They're usually just as spectacular, but because of the way that investor psychology works, bull markets are fueled by optimism, which is highly contagious amongst undisciplined investors and speculators. The price starts to rise, so we have a dangerous combination whereby nobody wants to sell, and so the supply of ADA on the market is massively reduced. And then at the same time everybody is buying, so of course no price is too high for a short while. It usually doesn't take the market too long to correct its mistake, but as evidenced by this chart, once the bubble does burst, the price won't just come down to its fair value, it usually sinks far below. And that's because once the gains disappear and the short-term speculators drawn into the bubble pack their bags and leave, fear grips the market and nobody wants to buy in a rapidly falling market as they don't want to be stuck with a huge loss. So while bull markets usually last for a short period of time, bear markets can last much longer as the cycle sort of becomes self-fulfilling. There's no optimism left in the market as many investors have taken heavy losses and people become over-pessimistic having heard the stories of huge losses incurred by other investors, which then makes the cycle slow and tough to break. ADA is currently priced by the market at around 15 cents give or take. That's far closer to the 2-cent low than the $1.23 high. Now given that the price has risen by about 400% this year from the lows of the bear market, I'd say that we're currently in stage 2 of the market cycle, whereby the initial gains from the low have acted as a braking mechanism for the self-fulfilling pessimistic cycle, and not only that but has also helped to set up the foundations for the beginning of what may well be another bull run. You see, these initial gains will be a huge pull for speculators and investors. After all, speculators gravitate towards areas experiencing large price gains, and of course, as for new investors, historically there has been no better advertisement than the allure of what they perceive to be easy money. Now it's important to bear in mind that this is only an opinion. Yes, it's based upon historic evidence and other investment principles, but there's a chance that I could be wrong. And if I am correct, this initial rise is only in its early stages. Of course, the best investors got in about here, but if this is the start of a bull run, then the price right now is probably way below the kind of prices that a bull run would likely bring, and Cardano is not yet again in mainstream favor. Another thing to consider is that Cardano is a real project which is constantly getting better, and therefore the value isn't a static line. It's dynamic, and with every new development and every new user, the value is improving. From what I've seen, Cardano from a user standpoint is far more useful now than it was at the time of the first big bull run. And by that logic, if another bull run is on the cards, I don't think that it would be unreasonable to expect prices to go even further. But like I mentioned earlier, I want to be absolutely clear in that when making an analysis or appraisal, I might be wrong, and things may turn out to be different than I initially expected. But investing isn't about never being wrong, it's about being right more than we're wrong. And in the cases where we are wrong, learning from our mistakes and making sure we do better in the future. That's all for this video. If you enjoyed, be sure to subscribe for more. Thanks for watching.